Broking. Welcome to the show, Mayuresh, and a very good morning. What's your stance with regards to where Yes Bank is concerned? Because clearly, the report that has come in from the RBI with regards to where divergence is concerned is telling you that yes, it's a clean sheet. They have passed the quality test by the RBI as well. What's your view?
Morning. So I think clearly, the nil divergence report is a huge positive for the bank. And as far as I think the three key overhangs were concerned, A was the CEO appointment which has been done. And again, I think what probably roadmap he brings to the table in the strategic formulations that he does, I think will be keenly watched out for. The second element was obviously the divergence report from RBI, and the nil report obviously is a huge booster for the bank. And the third obviously is their capital adequacy ratios. So the CET ratios are still low at this point of time. So how the new CEO probably pans out the entire strategic roadmap to raise capital, which will be accretive to the book, will be interesting to watch. So I think a couple of overhangs are out of the way for Yes Bank in terms of capital raising. What the strategy will be keenly watched out for. But apart from that, I think the fundamentals also have been very, very supportive for the bank. So the advances growth has been pretty solid. The bank still maintains that the run rate will probably go on, albeit with the fact that capital raising needs to happen to maintain that over the next 6 to 8 quarters. The second element in terms of credit cost being elevated, I think that also can start tapering off over the next few quarters. And with PCR moving higher, I think that is an encouraging sign, because I think once you shore up your provisions, I think it does take care of any damage or deterioration that the balance sheet does face. Again, from a book value perspective, I think attractively priced at this point of time. So yes, I think a positive move in Yes Bank can probably be seen. What happens with capital raising can probably re-rate the stock over the next few quarters. Clear disclaimer, we hold the stock in advance.
Right, so that's with regards to Yes Bank. Mayuresh, we are 2 minutes away from pre-open, but your quick view with regards to where Axis Bank is concerned. The office has been subscribed almost 3.68 times, and this is on the second day of the offer right now. The investors have clearly given it a thumbs up, with regards to the OFS. What's your view from here on?
So I think OFS was a technical adjustment in terms of how the price moved, but largely again I think one also needs to concentrate on the fundamentals, and retail advances have grown at a very fast clip. When you're probably talking about asset quality pressures, a large part and recognition of the watch list has gone through. The PCR has improved significantly for the bank, including the NCLT cases. So any resolutions thereof is obviously going to be a huge positive for corporate lenders. The fourth element obviously is the credit costs, and similarly like in the case of Yes Bank, I think it should start tapering off, which will reflect very, very positively in terms of return ratios. And the fifth is the non-interest income as well, with retail having a lion's share there as well. Now, as far as the asset quality and power sector exposure is concerned, a major part has been provided for, and a huge chunk is probably A-rated and above. So I think the risk element in terms of what can go wrong in terms of slippages, I think that is within the control of the bank. One might very well argue that valuations probably are a tad bit on the higher side. But hey, I think if the bank is able to perform the way it has, I think the return ratio should show improvement, giving justification to premium valuations. So I retain a positive stance on the stock, and again, clear disclaimer, we hold the stock in our funds.
A complete breakdown on that one, but Piyush, as we were just talking with regards to auto counters as well, the kind of downtick that we've seen in the last 2 to 3 trading sessions, especially with the two-wheeler space, we did see that up move that did come in. So Hero Moto, Eicher Motors, Bajaj Auto. In fact, Hero, we did start off with gains of almost around 4 to 5%. If you can just quickly pull up the intraday chart, there you go. From a high of 2,894, again, some bit of cooling off that has come in on the counter. Mayuresh, let me take your view with regards to where the two-wheeler space is concerned. There has been selling pressure, there has been stiff competition in the market as well with regards to where gaining market share goes. Pretty much, on a muted move is what we are seeing auto counters, but today probably we are seeing some bit of a relief, up move that's coming in. Do you think this is a sector that someone should avoid at this stage, or probably there could be good buying opportunities? Because even from the auto pack of Ashok Leyland, M&M, which hit 52-week lows in yesterday's session.
So, Hiral, again, I think the entire pack is going through some amount of softness as far as volumes are concerned. Now, what you've probably seen in the quarter gone by and the kind of built-up that one really assumes at the dealer level, again, I think that is creating some amount of lumpiness as far as the volume growth is concerned. The second element, obviously, is that few of the automakers have taken price hikes, and a few more hikes will be required as the BS6 norms come over the next 4 to 6 quarters. The third element, obviously, has been the higher ownership costs. So with insurance costs soaring up and what we probably saw in terms of both petrol and diesel price movements in the quarter gone by, again, there was some deferment which probably happened. The fourth element, obviously, is the discounting factor, specifically in terms of the MHCV segment. And the discounting factor very well continues. The new axle load norms have created a short-term blip as far as the volumes are concerned, or wheel in the spanner, if I may put it. And a large element, again, in terms of pre-buying for BS6 would probably resume. So I think the street is probably glued to how the monthly numbers start stacking up, specifically over the next few months. The second element, obviously, is how the margins are going to shape up, because in a scenario of competition, intensity pressures, along with input hikes and the price realizations that they have taken in terms of hikes on models, specifically whether it's two-wheelers, passengers, I think there is going to be some amount of deferment happening on that count as well. So largely, yes, I think I would agree that the auto sector as a whole might see some softness and lumpiness. So I think the monthly numbers over the next 2 to 3 months will be very, very critical for the sector.
Present. Mayuresh, coming to you, looking at the sort of PSU theme at present, whether it's energy theme or it's power theme, what's the word at present? What's the sort of valuation picture looking to you? There's also Bharat 22 ETF which is coming by, but looking at the correction which has happened in the last 2 sessions, how's it looking to you?
I think one really needs to be a little bit more selective within this entire basket, Piyush. And when you bifurcate this between the defense players, the PSU banking guys, the infrastructure guys, there again, I think there is some amount of lumpiness that still carries on. The third element, obviously, is valuations. The valuations probably are very, very attractive for a whole host of these players. But does that justify the kind of earnings growth that can come out of them? For PSU banks, I think, just as an example, I think what you've probably seen in terms of recoveries, upgrades, have been pretty stellar so far. But again, the lumpiness in terms of reported numbers, asset quality pressures have been on and off. The slippages count, again, for few of the mid-tier banks have gone up. What it really entails is that there is still inconsistency that is probably being displayed. For the larger PSU basket, again, I think execution is going to be extremely critical. What probably happens in terms of margins going ahead is also going to be critical in terms of bottom line. And again, I think a few of these PSUs, the Maharatnas as we call it, I think are having extremely efficient cash reserves on their balance sheets. So from a balance sheet perspective, I think it's not an issue at all. From a valuation perspective, there is no issue at all. But it's just the consistency and the compounding of earnings that one probably looks at. You're absolutely right. I think the Bharat 22 ETF, I think, is a huge support, because I think the kind of investments that come through, probably in all these stocks associated with the index itself, does lend support at lower levels. But does it become a very lucrative kind of a perspective? I think you need to cherry pick within this entire pack. But I'll be very, very selective within this whole basket.
Thank you, gentlemen. Thank you for sharing all those trading strategies and the views. But before we slip into a short break, Nifty